Hey everybody, it's Jack and welcome back to another video. It is yet again the weekend, so it is time for another portfolio update video. We just finished week 14 of our WealthSimple journey, where my goal is to bring a $1,000 account up to $100,000 through saving like crazy and smart investing, with the end goal of one day being able to retire off of my investments. That would be sweet. As always, in this video, I'll be going over the stock market the week that was last week, as well as my stocks that I bought, any that I sold, and then I'll also be going over my portfolio breakdown and jumping into my weekly watch list for the week ahead, going over the stocks that I'll be looking to pick up over the coming week. Before we dive in any deeper, I do want to quickly give a big shout out to all the mothers out there. Happy Mother's Day to all of you. You guys rock. So now touching on the stock market the week that was, we saw yet again another very bouncy week in the stock market. We're starting to see a lot more volatility in the market, even when it comes to kind of safer dividend stocks. They're even swinging a few percent in a given day. So we saw a few red days last week, heavily overall in the stock market, and then a few green days. Kind of balanced out. For me personally, my portfolio again was almost exactly 0% even on the week. So not a whole lot of change for my portfolio, but some of the stocks in my portfolio had heavily in the green, some heavily in the red. So I'll jump into all of those further in this video. And I'll start to talk on what my strategy is going forward as we start to see more volatility in the stock market. What am I going to be targeting more in my investments and kind of my strategy going forward? So as far as my account status goes and my portfolio update, I'm currently sitting at $4,827.26. But like I mentioned, we are pretty much even on the week. So on Friday, we were up $14.57, 0.37%. But actually all time, we're still up the exact same as last week, just under 1% all time. And again, I'll jump into the actual stocks that are holding us back and some of the ones that are doing well for my account. And we'll jump into that now. So I did go ahead and add one brand new position to my account over the past week. It was in the financial sector, and if you watched last week's video, you saw this one on my watch list. It is Manulife Financial, ticker symbol MFC. I started a brand new position and I now have 4 shares of Manulife. Manulife had a very interesting week. They actually had their earnings last week on May 6th. I picked up 2 shares of Manulife before earnings, and then I ended up picking up 2 more shares of Manulife after earnings because the stock actually dropped over 5% after earnings, even though they actually beat the analyst estimates for their earnings report. The reason the stock dropped is because their net profit or net income actually took quite a significant hit compared to last year's results. This is mainly due to the state of the pandemic. People aren't in the office working, people aren't traveling. Overall, insurance companies aren't doing as much over the past year. So that's definitely playing a role in Manulife's financials and their income. But I actually featured Manulife in a video last week that I'll pop up there. And I actually featured it as one of the top buys for a dividend stock in the month of May. And my main reason behind this is their growth potential in the Asian markets. They're actually growing quite well over in Asia. And this is really my main bull thesis behind Manulife moving forward as a long-term investment. They actually saw and released in their report earnings last week that they've seen 16% growth over in Asia in the past year for year-over-year growth. And this is really exciting. And this is really the main reason why I'm investing in Manulife long-term. And I'm not really worried about in the short term. I really think this is still a great long-term investment. So now jumping into my portfolio spreadsheet where I track my passive income as well as my portfolio breakdown, which as always, you can download for free in the link in the description below. If you want to add your own stocks in and play around, go for it. And I first want to address that I know some of you guys have been commenting over the past week that in the spreadsheet, the dividend per share or dividend information has not been displaying. So these columns on the right. So thank you everyone for commenting that and noticing that. It seems to be an issue with Yahoo Finance. Yahoo Finance is where I automatically pull the data for all of the dividend information. And it seems like on Yahoo Finance's end, sometimes things happen on their side where it causes the information to not come up and not show, or it just shows as blank. But I've seen that over the past few weeks, this has happened for me a few days here and there, but it seems like over time it works itself out because as you can see, it seems like all the dividend information is displaying correctly for me right now. So I definitely recommend you guys all to check and see if it works for you now. And let me know if it isn't, and I will work on a more permanent fix. So now jumping in first to the stocks that I purchased last week. If you watched last week's video, you knew some of the stocks that I was targeting. As I said already, Manulife Financial, MFC. I currently have 4 shares, so I picked up over $100 worth of Manulife Financial. You can see that I am currently down 2% on the position because I picked up a few shares before the 5% drop, and then I picked up 2 shares after the drop, so it averages out to being that down around 2%. And this is definitely one that I want to continue adding to over the coming weeks, as it's currently only 2.1% of my portfolio. Definitely want to boost that up a little bit by adding another share here and there. Another stock that I added to is Algonquin Power. I added one share to Algonquin just because a dividend growth stock that I really think is going to continue to grow not only in share price over the coming years, but also the dividend yield. It's been raising its dividend at a very steady, like 13% rate over the past decade, which is awesome. And you can see that after the drop, it's currently down around $19.30. And the current dividend yield is now actually above 4% because of this drop in share price. It does make up 8.8% of my portfolio, and I'm currently down 7%. But again, I'm not worried. I'm just averaging into this and continuing to add a few shares here and there. Third stock or ETF that I added to last week was my QQC.F NASDAQ 100 ETF, which is one of my stocks or ETFs that gives me exposure to the US stock market. A NASDAQ 100 ETF really gives any Canadian investor great exposure to the US stock market, especially big tech such as Google, Apple, Facebook, Amazon. So this is one that I really think is great. We've seen big tech across the board take a little bit of a hit over the past few weeks. So I thought it was a great time to add another share of QQC.F. So I now have 3 shares and it makes up around 7% of my portfolio, which I'm happy with. And now touching on some of the stocks that are not performing as well in my portfolio. The majority of the stocks that aren't doing well for me right now are in the renewable sector. And this is because the renewable space has been seeing a bit of a sell-off over the past few weeks, a quite significant sell-off across the board actually, around 15 to 20% in the majority of renewable stocks. And this is no different for the stocks that I hold in my portfolio. So first, starting with Brookfield Renewables, we can see that I'm currently down 14% on Brookfield Renewables. This is a stock that takes up 6% of my portfolio, and it was actually around $60 per share just a few weeks ago, and it's now trading at $48, so an over 20% drop in share price. This is a stock that long-term, the renewable sector as a whole, I'm really bullish on. I'm going to be looking to add 1 or 2 more shares of Brookfield Renewables over the coming weeks. This is a stock that I'm mainly focused on for the growth aspect, and the huge cherry on top is that this stock at the current price has an over 3% dividend yield, which is really just seen as a bonus for me. And then you can see as far as it goes for my kind of penny and higher growth stocks, the main 3 that are down right now are H2O Innovations, which is a renewable company in the water treatment space, as well as Good Natured Products, which does have ties to renewables as it's a alternative to single-use plastics. They make plant-based alternatives to single-use plastics, which I think over the coming years is really going to skyrocket and see some more popularity. So I'm really excited about that one. And then finally, one of my growth stocks that I'm most passionate about and bullish on long term is Greenlane Renewables. This is a renewable energy stock in the renewable natural gas space, which is really just in its infancy as a sector and industry. And I really see this one growing really well over the coming years, but it has seen a really big hit in the short term. And I'm currently down 17% on this stock, but it's actually kind of around a support level. It's seen some really nice support in its stock chart around the $1.58, $1.60 range, which it's currently trading pretty close to right now. So it has seen some really nice support and hasn't been dropping lower. So this is a really positive sign. And I'm probably going to pick up a few more shares of Greenlane Renewables if it stays around this $1.60 price, as I think this is a great opportunity to buy in. And I really see this being a $3 plus stock over the next year or so. So that's possibilities for a 100% return on this investment. But remember, I'm not a financial advisor by any means, so take it with a grain of salt. So now jumping into my passive income or dividend tracking, as I do have a lot of dividend stocks within my portfolio, and that's kind of my main focus, I'm trying to start to move towards dividend growth stocks. So stocks that not only grow in share price, but also grow their dividend year over year, which is, I think, as a long-term person who has a long-term investment horizon, such as 20, 30, 40 years, looking at these stocks that grow in share price as well as grow their dividend on an annual basis is really a good thing for anyone who's looking for long-term growth. So as we can see in my annual dividends, over the past week, by adding a few dividend shares, I was able to increase my annual passive income from $109 to over $117, over $8 by adding a few dividend shares. And this is income that I'm going to be getting every single year for the rest of my life. So again, big picture, by adding a few of these stocks every single week, you're increasing your annual income for the rest of your life. So now jumping into my portfolio breakdown, we can see the stocks and the positions I own and their weightings. You can currently see that the majority of my stocks kind of fall into 4 to 8% of my portfolio, which is kind of that sweet spot that I'm aiming towards. Not over leveraging myself into one certain position, which I had done in the past. I'm kind of averaging it out now. And I kind of now look at that 4 to 8% as ideal diversification across the board. And jumping into sector allocation, you can see that the renewable sector is my largest sector. I currently have 20% of my portfolio in renewables, which is why my account has been taking a little bit of a hit over the past few weeks as the renewable sector has seen the sell-off. So I'm definitely trying to bring this down in weighting by adding to, like I said, financial sector, some utilities, as well as my ETF positions, and just trying to get more diversification across sectors, really trying to set myself up for safety. If anything were to happen to one sector in general, I don't want it to wipe out my account. And I've started to see this a little bit with renewables selling off. You know, it has hurt my account quite significantly. So just trying to prevent this in the future by having great diversification across sectors is really important, and definitely recommend that. And finally, for asset allocation, you can see that I currently have around 30% in growth stocks, 20% in ETFs, and around 50% in dividends. This is kind of what I've been trying to strive towards. I am still trying to reduce my growth stock allocation to like 25% ideally, and bring ETFs up to 25%. And I'm starting to do this by adding more heavily to my ETFs as well as my dividend stocks. That leads me nicely into my weekly watch list for the week ahead. So the stocks that I'm going to be looking to add to my positions over the coming week, or maybe start brand new positions. For growth stocks, I'm now targeting more dividend growth stocks, as I mentioned, for my growth side of things. So one stock that I just featured in my best stocks for May video, that again, I definitely recommend, these are some great stocks in that video, is Canadian National Railway, ticker symbol CNR. This is a dividend growth king. It's literally one of the best dividend growth stocks in Canada. It's been growing its dividend at an annual rate of over 15% for the past decade. CNR currently has around a 2% dividend, but by holding this stock for multiple years and letting that dividend grow, you're going to start to see a 3, 4, 5, 6% dividend from the stock by just holding it long term. And it's also seen some crazy share price growth over the past decade. So this is more of a growth stock with that 2% dividend as a bonus. So I'm definitely excited about starting position in Canadian National Railway. And I look to pick up one share next week, hopefully under $135. That would be the goal. So let me know if this is a stock that you guys own and if you're excited about it. It's also seen a 10% dip, but again, I go over all that in the video I released last week. So definitely check it out. The second kind of dividend growth stock that I'm targeting, as I mentioned, is Brookfield Renewable, BEPC. I'm currently down quite a bit on this position, over 10%. And this renewable energy company is one that I'm super bullish on long term. And again, it offers a 3% dividend as a bonus. So I'm looking to add one of them below $50, averaging my costs down quite significantly. I'm really excited about this. So hopefully it stays under $50 for the week to come. And as I mentioned, dividend stocks is targeted toward bringing up my sector allocation in the financial sector by continuing my new position in Manulife Financial. I look to add one share below $26. And then secondly, one stock that's been on my weekly watch list for multiple weeks now is TD Bank. I almost pulled the trigger last week as TD dropped to just above $83, but I didn't end up doing it. And now TD had an absolute crazy second half of the week, is now trading around $86. So TD and the banks have been going off. So I do want to increase my TD positions, but hopefully it sees a little bit of a pullback to close to $84. This is more of a price that I'm willing to add to the position at. So hopefully it pulls back a bit to $84. So there you have it. That was my weekly watch list for the week ahead. As you can see, I'm starting to shift my focus away from the penny growth stocks as the market becomes more volatile and we're starting to see some more ups and downs. I'm really going to start to focus on dividend growth stocks. I really think you get the best of both worlds in these types of stocks. They see really nice share price growth year over year, long term, as well as still pocketing that 2-3% dividend, which is really just a cherry on top and means if anything were to happen in the stock market over the coming year, if we see a big sell-off or anything like that, you're still pocketing that nice dividend while you wait for your investments to start to see that share price appreciation. I'll be focusing on Canadian National Railway. I think they are one of the dividend growth kings here in Canada, and I think they are a great long-term investment. So I'm going to be starting my position in Canadian National Railway, CNR, as well as adding to my BEPC, Brookfield Renewables position, as Brookfields and the renewable sector as a whole have seen quite a big hit over the past 2 weeks, dropping over 20%. So I'm definitely going to be snagging another Brookfield Renewable. And then like I just said, I started a position in Manulife last week. I'm going to be adding another share to this position if it stays down at these prices after that 5% drop. I really think Manulife again is another great long-term dividend play. So I hope you guys enjoyed this video. Those are kind of my thoughts for the week ahead. Let me know down below in the comments your favorite stocks for the month of May. What are you guys adding to your portfolio over the coming weeks? Let me know and let us all know. Super curious to find out. But again, I hope you guys enjoyed this video. If you did, smash that like button and subscribe to the channel. Lots more content coming, and I'll see you in the next one.